Guys, I want to thank you for attending this session in our webinar series at Cashflow Champs today. It is our intention to bring you good content on a weekly basis, develop good business relationships with you, and also to be a resource for you in the multifamily real estate space. Today, we're going to be covering the topic sequential steps in the multifamily acquisition process. And in this webinar, we will learn sourcing the deal. They'll talk about some criteria, deal criteria and preliminary underwriting. We're going to talk about touring the property, property management, insurance, and debt, fully underwrite the property. And that's just a high overview of what underwriting is, and LOI to purchase and sales agreement. I think this may be a two-part webinar because we're going to stop at the PSA today. Another webinar, we can pick it up from the PSA to closing, right? But a lot to cover, so let's jump into it. I want to introduce myself. I am Paul Senior. I'm one of the managing partners at Cashflow Champs. I'm married, live outside Washington, D.C. with my wife and 3 children in Prince George's County, and I'm also the co-host of Cashflow Champs Real Estate Podcast with my partner, Prashant Kumar. And to get some more information on us, you can always go to cashflowchamps.com/underwrite. Our team has a portfolio right now of about 1,600 plus doors, a little over 146 million asset under management. We do have some free resources for you, Cashflow Champs. We do a Saturday underwriting session at 4 p.m. You can go to cashflowchamps.com/underwrite. Or you can just simply scan the QR code that is on your screen. We also have a paid coaching program. That's the Aristocrat Coaching Program. And that program has been very helpful to those guys who joined it so far. In that program, we teach you how to pretty much take down your first syndication deal or multifamily deal. And also, if you are an experienced operator, we also can teach you how to scale your multifamily portfolio as well. We have a lot of experienced guys on our team who has done many full cycle deals, and therefore, it's been very helpful for those who are joining us in that program. I must let you know also about a virtual summit that we have every year. I had it last year for the first time, really. This year is going to be the second time. Last year was a success, and this year is going to be November 17th, 18th, and 19th. So go to cfcsummit.com to get some more information on that. And definitely would love for you to join us this year. If you have any questions as you go through, please put them in the Q&A, and then we will answer those as we go through, and maybe at the end if there's any question left over. Simple disclaimer that I must read. I'm not an attorney, financial advisor, or tax advisor, or an accountant. The purpose of this webinar is for information purposes only, so you want to seek professional advice from the appropriate personnel as you listen to this webinar. So let's go ahead and just engage the topic today that we'll be talking about, and that is the sequential steps in multifamily real estate acquisition. So we'll be covering these. So first is deal source and the preliminary underwrite of the deal. Well, if you're going to be an operator in the business of multifamily syndication, then getting the deal is paramount, right? So you absolutely have to source the deals. And the way you want to do, it depends on the size deals that you're going to be looking at. For us at Cashflow Champs, we look at deals that are 100 units and better. Some folks look at deals that are smaller, 75 or 100 units and less. And so sourcing the deal for us has to do with brokerage relationship. And you want to develop those relationships with the Cushman and Wakefields of the world, develop broker relationship with Marcus and Millichap, CBRE, and the different brokerage firm that may be in the area that you're looking to do business in. Remember that these brokers or these brokers, they represent the sellers in these transactions, right? So they're working in the best interest of the seller. And so you want to reach out to those brokers, get the relationship here, because those are the ones who have the properties to sell. So you want to introduce yourself, introduce your team to them. And if you're just getting started, or even if you're not getting started, you want to continue to build a relationship with them. So you want to build a relationship based on the type of property you're looking for, the class of property you're looking for, and so that you can stay at top of mind when it comes to to the area and properties that comes on the market. You also want to continue to talk to these brokers. You may bill it in terms of, taking them out for lunch. You may got to take them out for dinner. You may have to play around a golf. You may have to do a variety of things with these brokers just to establish those relationships. We've done a webinar before in terms of brokerage relationships, so you can feel free to go to our YouTube channel, and then you can see some of those resources there. But bottom line is that you want to have good communication, you want to have good outreach, you want to keep our communication log so you can continue to advance your conversation with these brokers as you go through, right? You got to communicate to them what type of property you're looking for, and so that they can know exactly what is it that you want, right? Another important thing is that you have to know the communication style of each broker. There are different brokers that are out there for different length or period of time, and they communicate different ways. So you pretty much want to dance the dance that they do. Some people like the phone, some people like to use email, some people like to use text, especially for the younger brokers. So try to adapt to what is it that they're doing and just kind of, play to their game, so to speak. When a broker sends you a deal, it's very important that you evaluate that deal, right? Evaluate the deal and provide feedback to the broker, I would say within 24 to 48 hours, right? Even if the deal doesn't pencil out, even if the deal doesn't work exactly the way you're looking for it, you still want to reach out to the broker and let them know why it did not work. It may be that you normalize the expenses and it didn't quite work for you. So communicate that with them and make sure that they don't feel as though they give you a deal and didn't hear back from you. So you want to stay top of mind with these brokers, and so that you can continue to build a relationship so that you can be one of their top buyers in the marketplace that you're in. So that leads us to the next step about preliminary underwriting the deal. So once you get a deal from a broker, you probably want to do preliminary underwriting of the deal, right? And that typically means that you're going to get a spreadsheet in terms of underwriting the deal, an Excel spreadsheet. Some people use different spreadsheet. We use the SDA, but you can use any spreadsheet. Different guys out there have built their spreadsheet. You can choose to build that if you want to do that as well. And the important thing to know is that you become very familiar with whatever model that you're using. So use that model frequently enough and get comfortable with the model so that you can interpret the numbers that are coming in from that model. So typically a broker will provide you a T12, a rent roll, and an OM. And what you do, you get the numbers from the T12 and you transpose it over to your underwriting model, right? So for example, your T12 may look something like this, right? That is your T12 that you may get from a broker. The T12 is the trailing 12 of what's going on for the financials for the property or for the last 12 months. So you will get on the T12, it will give you the income that's going on the property, a listing of where the income is coming from, right? And it also gives you a listing of the expenses, right? That goes down all the way to the bottom, right? So what you want to do for everything that's in your T12, you want to make sure that it's transposed over to your whatever Excel model that you're using. In our case, we use like I said, the SDA, right, which is a syndicated deal analyzer, right? And it looks something like this. So here is your income category in the SDA, right? And your expense category is here and below, about 13 items that are there. So everything that is in your income section, like we just highlighted, has to be transposed over into the SDA. Typically, when you're doing a preliminary underwriting of a deal, you tend to take the last 3 months of income and you annualize those, right? So you will see that the number here is a little bit different from the number here. The number here is an annualized number. This one is the actual one that was got from the market projections, right? So bottom line is these numbers have to be transposed over into your SDA into the income category. So for example, where your vacancy is, you pick up your vacancy number from here after it's analyzed, and that number would be transposed over into where your vacancy here on line 22. So you put that vacancy number right here. This T12 doesn't jive with this exact numbers in here. This is just an example, but the vacancy number, when you're underwriting the deal, you pick it up from here and you stick it over here into your vacancy column. And same thing you would do for your gross potential rent, right? You'd get your gross potential rent. You'd have to get up here where the market rent is at your gross potential rent. You'd pick it up from here. You'd pass it over there. So each one of these items must be placed within your SDA when you're doing your preliminary underwriting. Same thing you have to do for the expenses, right? And we're dealing with the marketing package here, right? This is a package that you got from the broker that you're just simply putting their data into the SDA so you can make sense. You can make sense of it. Here are your expense categories, right? And so everything that's in your expense category that you got from the broker from the T12 will also has to be placed over there into the SDA. So this is your expense category, starting here with your administrative, and you go all the way down about maintenance, insurance, and everything all the way down to the bottom, right? So all these numbers must be transposed over. Now, when it comes to expensive, you do not annualize your expenses. You do the last 3 months of your income and you annualize that. With the expenses, we don't do that. We actually go off the actual expense that is there. So again, for example, administrative, which is one of the category, in the SDA, you grab your number, which is here, and then you put it over there. Insurance is another number, that has its own category, right? So you grab your insurance. If you look at the categories here, insurance has its own number. Of course, you have advertising, you have contract service, gas and electric. And so bottom line is it's a simple transposing of the number from the T12 into the SDA or whatever Excel model that you're using so you can help with your analysis. So that has to do some with the preliminary underwriting of the deal. So you want to do that. Bring this back up here. So you want to make sure you get some preliminary numbers in there when you are underwriting your deal. So transpose it over from your T12. You may get some information from the rent roll as well that can help you with that. But you want to get those numbers in there so you can get a good idea as to what is it you're working with. You may also want to get some insurance numbers, right? One place you can go to is ratemap.org. That's a place that can also give you information regarding insurance, because these are preliminary numbers. Later on, you'll get an insurance broker and you'll get an indication of the insurance to be more exact. But right now, you're just doing a preliminary underwriting just to see if this deal makes sense at all, right? So once you get those numbers, you're going to put it in there. You're going to try to build a pro forma from those numbers. And what I mean by that is, here is your marketing package you got from the broker. I made mention of that with all these numbers. These represent the numbers that they're currently operating the property at. What you want to do is build a pro forma from that. These numbers will be significantly different from what is in. These are your numbers. This is how you're going to operate the property. For example, advertising. This seller is saying their advertising is only $8 per unit on this property. Well, I don't know where you can get $8 to advertise anything, but if you're going to operate the property, you probably want to use $150 per unit. You may get indication from your property manager as to what the number actually will be, and they may give you these numbers. So you'll adjust these numbers accordingly so that it fits the way that you and your property managers will be operating the property. So here you're building a pro forma of how you're going to operate the property. And that's kind of what you want. You want to build it the way you want to operate it so that, you can make it work the way for you and your investors. So once you do that in terms of the preliminary underwriting, you want to go ahead and take a tour of the property. If when you do those, the numbers preliminarily look like it's decent, like this is a possibility, you're probably within, I don't know, probably 10-20% strike mark of the guidance or the price that the broker gave you, then you probably want to take a tour of the property. The truth is, I would go ahead and if I'm just starting out especially, I'd go ahead and take a tour of a property that a broker offered me anyways, because that way you get more face time with the broker, you can build a better relationship with the broker, and then you can also get a chance to just see the property itself. So go on tours, even if the property does not pencil for you, right? You want to go on tour, especially if the property pencils for you, because that way you want to get a chance to see what the property looks like. You want to really see what the area look like. You want to get a good tour of the property. You want to see if there's any deferred maintenance on the property. You want to see if there's any trash hanging out on the property, and how you treat the property differently when you become the owner of that property. So you want to also look, what type of cars are in the parking lot. That sometimes is a good indication in terms of your tenant base, right? I mean, it's a preliminary judgment that you're making, but sometimes you, just by looking around the complex, it will give you a clue in terms of what is really going on at the property. I would say bring a notepad with you. Ask a lot of questions, right? Ask a lot of questions. They're standard questions that you can ask the broker, and get those questions answered. I mean, look around and see what's happening. And if you can talk to somebody who has been at the property for a while on the tour, right? Maybe you have a maintenance tech that you run into that you can, ask a question. Somebody been looking at a property for 2, 3, 5, 7 years. They know these properties pretty well. They know if a hot water heater, there are issues with hot water heater. They know about the electrical problem, and sometimes they share that type of information with you. Whatever information that you can get that can help you to make a good decision regarding the purchase of the property for you and your investors, you absolutely want to do that, right? So typically a tour will probably take 30 to 40 minutes or so, depending on the size of the property. And remember, touring the property is not a detailed inspection, right? You will, if you get the property under contract, eventually, then you'll get a chance to do due diligence on the property, where you can get all your personnel out there, like your plumber, your electrician, your roofers, and all those type of guys. And you'll end up getting a PCR report, which is a property condition report. That's probably 50-page or more, that spells out just about everything that is going on the property. Touring the property is not that. Touring the property is just a very light version of that. So the important thing is that you're trying to gather information here so that you can go back and tweak your underwriting so that you can best represent, it will best represent the numbers that you want to reflect in your underwriting. So once you do that, then you're gonna, the next step in the process then is to reach out to third parties, right? You got your property management company, you got your insurance, and you got your debt broker, right? So if the tour goes well and the numbers look good, then and you get good information from the broker, the next thing you really want to do is to reach out to these third-party personnel. Right now, this is very important because some people use third-party management and some people don't, right? Well, Cash Flow Champs, because we deal with bigger units, 100 units or more, we do use third-party management, and we think it's very important for our business because what they can do, they can take your, they're there to take your pro forma and your business plan and really implement it for you. They're the one who are going to be boots on the ground doing that for you. And you should involve your third-party management as soon as possible in the overall process of the acquisition process, right? So you want to reach out to them not after you have the deal under contract, but you really want to reach out to them even prior to the initial tour, right? So that you can get some good information from them and ask their opinion of the property. If they're local, especially, and they're already managing properties in that area, then ask their opinion of the location where your property is located. They may have some information on crime statistics. They may have a lot of information that can help you to make an informed decision, right? You can also get an external pro forma from the property management company, right? And you can ask them, how far can you push rent, for example, right? A good property management company will give you a good idea in terms of what type of rent you can achieve for that particular asset. They can also give you a good idea about your CapEx budget, right? For example, you inform them if you're going to use that amount of CapEx budget, whether it be $1,500,000, whatever, how much rent can we, how far can we push rent after we implement this CapEx budget, right? So you want to have this relationship with your property management company even before you start looking at deals, really start building those relationships. And insurance. This is probably the second biggest expense that you will have behind real estate property taxes, right? So the insurance vary widely from market to market, so you have to be aware of the market that you're in. This year, especially, insurance has skyrocketed in a lot of places. I know Florida for sure was hit very high, very hard with high insurance, and you have insurance sometime doubling for sure, sometimes tripling and even quadrupling in some part of Florida. Insurance just went crazy in Florida. And so, this insurance, it can literally kill your deal. I mean, having your insurance amount rise twice or three times is definitely a deal killer in a lot of cases. So you should absolutely get an insurance quote before you put your property under contract. So just like you build good broker relationship, you should also build good relationship with your insurance brokers. You really just need one or two good insurance broker, really. I mean, having three is plenty. But they will give you a good idea in terms of what it is. And insurance quote, you can always get those from your insurance broker, get good insurance indication from them, and so that you can use actual numbers when you are underwriting those deals. Now, your debt in the deal it typically account for the biggest portion of your capital stack, right? So your lender is really your biggest partner in the deal. And in these deals with agency debt, Fannie Mae and Freddie Mac these days, you probably get about 55 to maybe 65% LTV. And probably with bank, you probably can get a little bit more, but definitely your debt is the biggest part of the capital stack. So you want to, again, build good relationship with these debt brokers in the capital markets because they have a lot of connections. And these brokers will broker the very best deal for you. They're like the middleman who's working on your behalf, right? So they work to get the best terms for you. And when you're working on those deals, then they'll provide you with a term sheet that has just various options for you. And so you may get a fixed rate option, you may get a floating rate option, whatever it is. Just underwrite the deal using different scenarios, to see which one works best for you. In this rising interest rate market, the Fed just pushed the interest rate up again. That can be a big thing, right? So you want to make sure your underwrite is such that your deal cash flows so that your investors will be happy starting out on day one. You should try to follow also and try to understand the debt market, right? A lot of operators don't do that, but you probably should do that if you want to be a great operator in the space. One good resource for that is penscore.com. You can learn about like the forward SOFR curve and many other relevant information about the capital markets. You can learn there about the treasury rates, for example, what's going on there. So good resource, penscore.com, that you can visit and try to get familiarized with the capital markets in general. All right, so let's just recap a little bit. So we talk about we source a deal in terms of the criteria for the deal, we preliminary underwrite the deal, we take a tour of the deal, and the next step after that was the deal with the property manager, the insurance brokers, also your lenders or mortgage brokers. And then what you want to do is to probably fully underwrite the deal the best way that you can. So before you get your LOI out there, you also understand that underwriting a deal is not a one-time thing, right? That goes on until you actually go to closing. Sometimes you're underwriting the deal up to closing, so to speak, right? Because things are always changing and you have to make adjustment to that. But try to underwrite the deal as fully as you can prior to submitting your LOI. Your LOI is your letter of intent. So you want to fully underwrite your deal to do that, because if you get an accepted letter of intent, then we're going to touch next on the PSA. So to fully underwrite your deal, in addition to the things that we just talked about in terms of putting in the income, putting in the expenses, and adjusting those income and expenses based on what your real numbers are, you also got to put other information in there. For example, you want to make sure your rental projections is in there. You want to make sure your expense projections are in there. If you're going to have any rent escalation, and you also have to put it in there. And I could go back to the SDA and do that, but I welcome you to come to the session on Saturday, and Charles will go into that more in detail. And I think you'll learn a lot there. You also have to know the cap rate. One of the important thing of having these broker relationships and also these property manager relationships is that they're ears on the ground right there, and you can get good ideas in terms of what the capitalization rate is for that particular market. Now, if you work that market all the time, then you'll have a good idea as to what that is. But if you're entering a new market, especially, then you want to make sure that you get an idea in terms of what the cap rate is, because a cap rate can make a significant difference in terms of your valuation on the property. 0.5 difference in cap rate, 0.5% difference in cap rate can swing your numbers, sometime by the millions, right? So just depending on what size deal that you're working with. So that information you can get from property managers, you can get it from real estate brokers, and you can also get it online too. But I would more trust what's there in terms of the local market. So once you feel comfortable about what your numbers are looking like from your fully underwriting, well, now it's time for you to submit your LOI. Again, your LOI is your letter of intent, and you're going to find out from the seller when the seller has their CFO, which is the call for offer, and you want to make sure that you get your LOI out there in time, right? Don't get it after the deadline, get it in before the deadline, right? Matter of fact, guys, if you have questions, just put them in the Q&A, because we're going to be addressing those as we start to wind down here. But certainly get your LOI out there. So what does the LOI look like? Well, typically the LOI is maybe 1 to 2 page document, sometime a 3-page document. And the main items on the LOI just have to do, of course, with the price that the property will be at. You can just Google maybe LOI, letter of intent for commercial properties, and you'll see a good template maybe as to what that is. But the main things in there will going to be your price, of course, your address of the property, earnest money deposit, whether or not you're going to have any money going hard on the property. And what that means is that if you do a LOI where you're having your money going hard, it means that you will not receive that money back if you don't meet the criteria of what's written in the contract. For example, if you're supposed to perform something and you breach that, then that's possibility that your money can be withheld by the seller, right? So be careful about putting LOIs out there that has hard money terms in there. Just be cognizant of that. There's going to be a due diligence time frame inside that LOI as well. Normally you have 30 days for your due diligence. You have another 30 days to close the deal, and maybe you have another 30 days for extension, so to speak. So you want to submit your LOI to the broker so that they can present that LOI to the seller, right? And make sure those terms represent exactly what is it you're looking for. Now, the seller may receive your LOI, and there could be a good back and forth in terms of different rounds, in terms of you going back and forth with the seller negotiating what is it that's going to be submitted to the PSA. So the objective here, of course, is to have your LOI be the winner and still meet the criteria that fulfills the return metrics for your investor, right? You can't get carried away in the negotiation so that you forget that certain returns has to be met. You can't fall in love with the property. You should not fall in love with the property so much just from its beauty that you forget what the numbers are looking for. So the bottom line is that you want an accepted LOI from the seller that meets your term and criteria. And then that's when and that may take a while going back and forth, right? Working it out. And but once that happens, then, you'll receive that call or whatever from the broker letting you know your LOI is accepted. And then that's when we got to touch into the PSA, which is a purchase and sales agreement, right? So we're going to pick up there at another time, talking about maybe a webinar too, picking up from the PSA to closing, right? So, but for right now, let me just open it up for any questions. We're right about on time at 11:30 here, trying to keep this to about a half an hour. But let me open for any questions that you may have, and myself or Prashant will jump in and try to answer those for you. Put them in the Q&A because I'm not sure if the chat works. But ignore the Q&A works. So what was the website that you suggest to visit? I think I was talking about the capital markets, pensford.com. Let me see if I can pull it up here. Oh, by the way, this is ratemap.org. So, you can come here, you can get a good indication in terms of, for example, if you're buying in the Southeast, whatever, it will tell you insurance average rate per door for that, right? In different places of the country, you can get good insurance code. Look at the difference there. Can you see the difference between Florida and even, say the Carolinas, whatever, $2,600 a door, just tremendous, ridiculous. So this will just give you a little bit of guidance in terms of insurance code, but ultimately you want to reach out to your insurance broker and get that indication there, because that's what you'll be using in your ultimate numbers, right? Pensford. I think I was on the Pensford website, yeah. Yeah, so this is a website that you can learn about the forward curve and just read about it, just the market insight. It's a great website for you to just check out, right? So that's what we're talking about there. Can you go over an SBA? Can you go over, Miss Jackson, Raya Jackson is asking, can you go over what an SBA is again? SBA. I was talking about SDA. So the SDA, I think I meant SDA. Sorry if I pronounced that wrong. Let me answer live. Okay, let me go back here real quick. So yeah, this is a syndicated deal analyzer. It's created by a guy called Michael Blank. Hopefully give me some money for advertising here. But you can purchase at his website, michaelblank.com, BLANK, and you can purchase that. But you can use this tool, or you can use any other tool to kind of underwrite your deal. Just be familiar with the tool that you're using. But this is a tool that we use. We just kind of touch on it a little bit, and we talk about different changes we had to do later. For example, the cap rate, right? This cap rate right here is what we're talking about. It's a 6% cap, and there are different tabs in here, that you can see. P&L tab, acquisition tab, whatever. You can talk about your exit strategy. So we'll give you an idea there. So, but this is the SDA, syndicated deal analyzer. It's just a Excel spreadsheet, that you can use to underwrite your deal. You come in here, you put the purchase price, or the price per door that you want, and then you make just different adjustments to it. Whatever your this is for your repairs, right? So for example, if you're going to go in there and do some CapEx work on the property, for example, in this case, there's a 68 unit property, right? And so we're saying for this property that we're going to invest about $8,000 per door to renovate that property. So 8,000 times 68, we'll put an extra $300,000 in there for external work. So that would be your CapEx work for this right here, right? The lender will ask you to do that, which is the operating reserve, but we're not going to do an underwriting session right now. I attend the one inside with Charles, and he's much better at this than I am anyway, so you'll learn even more there. So yeah. So hopefully that was SDA, Rhea, not SBA. SBA actually is Small Business Association, which is something a little bit different. So Paul, when are you going to have 8-hour seminar? Morgan Stanford, yeah, that time, we're going to charge you for that one. Just playing. But yeah, we'll probably work on those too. Any other questions, just pop it in there and we'll be sure to answer those. What was the website you suggested to visit? I think I make mention of that, either ratemap.org for the insurance code, or we talk about pensford.com. Okay. All right. All righty, guys. So we think we answered all the questions. We're just right on time, right about 35 minutes or so, which is great. We just want to thank you guys for your continued support of Cash Flow Champs on these webinars. We try to get as much information out there to you as you possibly can. and to give you opportunities in terms of investing too. Matter of fact, talking about investing, we have a great deal right now in the Atlanta MSA in Decatur, Georgia. It's a $32 million deal. And that deal, we're actually accepting investors for that deal as we speak right now. So if you're interested in that deal, the deal is a great cash flowing deal, 8.1% cash and cash return. We have, I think, 17% IRR. I mean, AAR and a 16% IRR. So those are return metrics that you're not hearing in the market these days. So if you want to invest in that deal, I mean, reach out to me. I mean, Paul at cashflowchamps.com. Just pop me an email, or, and I definitely can talk with you about that. It's a 506c deal, so we can talk loudly about it on the airwaves these days. So if you or someone interested in looking into a great deal, just let me know. We can send you lots of information about that deal. But thank you for attending the webinar session today. Please go ahead and inform other people about these webinars, that you're getting good information for free on Thursdays at 11 a.m. Eastern Standard Time. Would like to grow this audience here even more. So thanks again for your time, and then we will catch you next week at 11 a.m. Have a great day.